Good morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Congrats, folks. We have made it to the final trading day of 2025, and congrats to you on all those epic gains you were sitting on in your portfolio. I know it took a lot of hard work to make that happen, and to that, I salute you. While I would love to shower you with more praise, I have to share what else is on my mind today, and that is the OG of investing, Warren Buffett. 95-year-old Berkshire Hathaway CEO Warren Buffett officially hands over the reins to his handpicked successor Greg Abel today. The passing of the torch caps a storied career for Buffett, which included buying a major U.S. railroad in Burlington Northern, striking up a friendship with Microsoft co-founder Bill Gates, and offering up scores of pithy comments in annual shareholder letters. And naturally, I've learned more from him than it being okay to have a full sugar Coca-Cola and a Dairy Queen hamburger from time to time. Here are 5 things that I have learned specifically from the Oracle of Omaha the past 25 years of my waking life. First, you can be a ruthless business person, but you don't have to be a total jerk in the process. Buffett is viewed as having done business in a right and honest way. Good to see. 2, saying no is a powerful tool in life. You have never seen Buffett do 30 TV interviews a year, even though we all want him to. He has been able to channel all his focus on building a successful Berkshire empire. 3, it's great to be the go-to person. In times of crisis, Buffett has been the person to visit for a loan or great advice. In turn, that has allowed Buffett to make great deals for Berkshire shareholders. 4, having an amazing business partner is often critical to success. Berkshire and Buffett wouldn't be where it is today without the guidance of longtime partner Charlie Munger, who died in 2023. And lastly, know when to strike. Buffett has scored favorable deals and investments because he knew when the time was right to strike. All right, lots to get here with Buffett. Big day. Let's keep the Buffett vibes going here. Here in the Opening Bid Roundtable, Lisa Schreiber, Gradient Investments Associate Portfolio Manager, Gregory Zuckerman, a special writer at the Wall Street Journal, and Kathy Seifert, CFRA, VP Equity Research. Gregory, I'm going to start with you here. You wrote a very fascinating piece on Charlie Munger not too long ago. What did you learn from putting that one together?
Well, Charlie contributed a lot, as we know, but he also was the kind of guy who would keep them avoiding mistakes as well. Be it Warren or others at Berkshire Hathaway, they're going to miss him. They're going to miss Warren, frankly. I don't think enough focus has been paid and attention is paid to the fact that they've got a $300 billion investment portfolio, and it's not clear who's going to run it right now. Todd Combs is leaving. We have an investor left, Ted Weschler. Now, Charlie said to me, well, I'm not that concerned. We have principles in place. We have a way of doing business, looking for new investments. The jury's out on that.
Greg, I also loved your story that you came out with recently about the CEO sold his business for $1.7 billion to Eaton, gave out, $240 million in bonuses to employees. I mean, it was an awesome story. Hat tip to that CEO. Was he at all inspired by Warren Buffett?
To some extent, I think everybody is. As you had kind of suggested in your opening remarks, it's in our DNA at this point. As investors, people in the business world, to some extent, do the right thing. Be careful what's on the front page. You don't want this on the front page of the Wall Street Journal or somewhere else, what you've done. Not everyone has listened, but yes, that executive and most others in some way has been influenced by Warren Buffett. The crazy thing is Warren Buffett in some ways doesn't get enough attention and appreciation as an executive, but also as an investor. He's responsible for the large part for this huge investment in Apple, which has been their biggest home run. So he is going to be missed.
Kathy, how has Warren influenced what you do?
Oh, that's a good question. I think he's influenced the way that I look at other executive teams, and the way that to one of your initial points was that you can be a tough business person, but you can also be a decent person. And I think that's certainly true with Buffett. I do take a little exception to some of the comments about some of the acquisitions. I think there's been a little bit of a mixed bag. And, I think what we saw this year was kind of the Buffett premium being extracted from the shares. And I think as we head into 2026, you've got a pretty significant company at a very important inflection point.
Kathy, can this business, as Buffett has constructed it, can it look like this 10 years from now?
That's a really good question. And I think the thing to look for is the degree to which that Greg Abel tightens up some of the operating structure. I mean, I think one thing to note, he's made several changes. You know, obviously the big change in the C-suite was Buffett stepping down, but in the last couple of weeks, we've also seen a lot of other changes, and those changes may also portend some structural changes, whether or not the very decentralized management style that Buffett personified, whether or not that remains intact, I think is the one big thing to look for.
Lisa, seemingly every day this month, I've been talking about Mag 7 stocks and the valuations on these stocks, and they're all trading at above market multiples. Investors continue to buy them, especially on dips. Is Warren Buffett's real focus on value investing, is that relevant today?
Absolutely, it is. I mean, it's an era that's coming to an end today, and he shaped not only the philosophy and Berkshire Hathaway over the last 6 decades, but also the lives and thought process of so many generations of investors. Right, with his perseverance, his patience, his value tilt that he had, and we can still learn a lot today. And his advice is timeless. What he said 50 years ago is still relevant today, and is ever relevant getting into 2026, right? And I think what we can take from that is, hey, stay true to yourself, stay true to your philosophy. It's time that counts, and be in it for the long run, and you will come out on top on the other end, right? I mean, when we look at the most famous quotes, investing quotes out there, a lot of them were dropped by Buffett, right? And a lot of that is very timeless and still very relevant today.
Lisa, is there value to be found in this market? And is value being, in the Buffett sense, being redefined given how powerful the AI revolution is playing out?
I mean, Buffett kind of mainly stayed on the sidelines over the last couple of years, right? Seeing the huge cash pile of over $380 billion, right? And I mean, it's just a huge number, but I like to put things into perspective. I mean, thinking of P&G, for example, yeah, household staples, that's the market capitalization of P&G, basically. Or Netflix, for example, a little bit higher than that, but comparable, right? That gives obviously a lot of wiggle room for his successor, a lot of flexibility there to put his own stamp on the company. But obviously, I mean, as Buffett stayed on the sidelines for the last couple of years and was a net seller of stocks, there's still a lot of value in today's market, given the overall valuation is still high, extended. We have a lot of market concentration. So we have to look a little bit closer for value there, but there is still money to be made in markets today.
Greg, you would appreciate this one. In our field, we're always looking for the next story and the story after that, the next big person. Who is the next Warren Buffett? I would argue Bill Ackman is taking his shot. I mean, but these are two wildly different people.
Oh, no. Yeah, Ackman doesn't qualify. It's funny. A lot of the people we end up writing about are kind of older, past 50, 60s. The younger generation, they're hidden in these like pods, they call them, within these big organizations that Steve Cohen and other people, hedge fund managers, run. They don't embrace the media, unfortunately. They don't.
That's
want
not
the
right,
attention.
Greg. What's wrong with these guys?
I know. We got to get them out of their little pods and holes and come to the surface. But they just don't have these kind of records. And they don't have manage the same kind of money. I think over time, what's been fascinating about Berkshire is the amount of money they can manage. I mean, even people like, Jim Simons and other kind of classic investors gave back money. David Tepper pushes money back to investors consistently, and yet Berkshire kept getting bigger. That's what's remarkable about Berkshire. It hurt their returns over time, but no one has been able to manage this kind of money.
Greg, when I went to the Berkshire meeting 2 years ago, I was at the bar after it ended, and in walked this guy. I told my teammate, Miles Udland, our head of news, who was there with me, I'm like, that's Greg Abel. I recognize him. He's a little shorter than I thought. Went over, shook his hand, said hello, and that was a bit, I didn't want to bother him, but what do we really know about him? We've seen his track record. He has not been, we don't see him out there doing interviews yet. He hasn't really given, I think, this big giant profile per se. Like, what do you really know about him?
Yeah, it's a great question. We're struggling to some extent. He's an accountant by trade, by profession, and by nature. So, he's not a showman. He's not out here like Warren giving lessons. Unfortunately, we could use some more than ever in this kind of age when we've got the AI rage going, meme stocks and such. we could use some, an adult in the room sharing some lessons. And Charlie's not with us anymore either. We don't have as many people. We've got Howard Marks, those kinds of people who we treasure. But yeah, Greg Abel, I don't expect to come out and give deep thoughts that we can all learn from. Unfortunately, he's an operator. I actually think over time, I have no idea. I haven't done reporting on this, but I think over time they're going to run this investment portfolio off and just operate as a conglomerate, because how can you go and make these huge, big investments when you don't have Charlie and Warren around anymore?
Greg, that's an awesome point. Kathy, what would that even look like if that portfolio is wound down? What happens to Amex or Coca-Cola? I mean, does that put pressure on these stocks? How should the average investor think about it if we do start seeing that happen?
Yeah, I mean, and that was one of the things, to your point about Greg. I mean, Greg has obviously, big shoes to fill, but Greg's not an investor. I would point out that Ted Wexler is still at the firm, and I think investors need to watch what his next move is. The thing is, they wouldn't necessarily have to run the portfolio off. And the other thing to remember is, a lot of that portfolio supports the insurance claim paying ability. So they're not just going to run the portfolio down to nothing. It's a cushion for claims. What they could do is bring in some outside portfolio management. But to that point about capital management, my sense is that there may be growing pressure this year, or in the next year and a half, from a certain cohort of the investor base, that given that they're sitting on all that cash and given their hesitancy, we believe, to do, a significant deal, that perhaps they should join the majority of other S&P 500 constituents and pay a cash dividend. So I think that's also something to watch in the coming year or so.
Kathy, of course, Berkshire doesn't have a monopoly on being an industrial business. Do industrials like Berkshire, of course they exist, do they interest you as a potential investment next year in an environment that still only loves 7 tech stocks?
Well, it's an interesting point, because actually the largest revenue and earnings contributor at Berkshire are their insurance operations. And the stock strengthened, the stock had weakened, and it's going to likely underperform the market this year. It strengthened in the last couple of weeks because of some market chatter about an increased degree of consolidation. But to your point, the other significant segment at Berkshire is its energy and its industrial businesses, which is where Greg came from. So I think under his leadership, it's likely to be an important segment for the company. And I think investors, given some of the industrial and energy related demands that AI is generating, I think that could be an interesting franchise to watch within the Berkshire framework.
Lisa, I would argue that industrials are being redefined. You can make a case that an Amazon could be an industrial. It's not digging dirt, but it's laying the foundation via its cloud services for the AI future. Do pure play industrials like a Berkshire, Lisa, do they interest you next year as an opportunity?
I think so. And I think in the industrial sector, I mean, that's very diversified. What industrials exactly, right? It's a very diversified sector in and itself. But what we think, for example, there's a lot of these traditional businesses that have yet to discover, for example, AI. And there's a lot of opportunities there to implement that, right? To have some important steps on infrastructure and all of that. So I think there is a lot of opportunities there where they can find efficiency through that once the AI build out kind of finally flows into other sectors, that the industrial sector is a huge underappreciated sector that can benefit from that. So very, very definitely an important sector to watch for 2026, yes.
Greg, last word to you. Really, I was thinking about it last night. The only other CEO I could kind of compare to Warren Buffett, and by no means the same direct comparison, it is Chris Nassetta over at Hilton. Longtime CEO since I believe 2006 or 2007, has always focused on doing business the right way, has grown that company, whatever it is. Is there another CEO out there that resembles Warren Buffett? And then secondarily, in times of crisis, where do companies go? Because Buffett has been that lifeline.
Yeah, well, to answer your second question, I think there are new pools of cash out there. There are private equity, the Apollos of the world. There are I don't know, not more ruthless, but they operate in a different way perhaps than Warren Buffett and Berkshire Hathaway. Kind of a handshake was enough for Warren and for Charlie over the years. And but there are pools of capital, Blackstone and such, and BlackRock. So they'll go elsewhere in times of crisis, and there'll be opportunities. I mean, Ken Griffin and Citadel, to some extent, they step in time and time again when there's a crisis and write big checks. But they do operate differently. We're going to come to miss Warren and Charlie, I think. And again, I don't see another executive on par stepping up with a track record like that. I mean, he's been doing it for 6 decades, Warren, and we're going to miss him.
Indeed, we will. Thank you so much for doing this. Happy New Year to you all. I appreciate it. We'll talk to you in 2026.
Thank you.
Straight ahead, keeping the Buffett breakdown going with insights from Brooks Running CEO Dan Sheridan. Brooks has been owned by Berkshire Hathaway since 2006. That's next on Opening Bid. Warren Buffett officially steps down as the CEO of Berkshire Hathaway today. Ahead of this, I got the chance to speak with Brooks Running CEO Dan Sheridan about Buffett's biggest leadership lessons and what's ahead for the company's high-performance running shoes. Brooks has been owned by Berkshire since 2006.
So what's happening in our space right now is the material engineering is just accelerating at a rate where, I think what you're going to see is the heights are going to kind of minimize here because you don't have to put as much foam underfoot because the engineering of the foam is so good. It can dampen and give you cushion and give you resiliency and energy on your run.
What's your big innovative bet for next year?
Yeah, well, it's definitely in performance categories. So this is a good example, but we're also pushing into trail as well, and a lot of innovation in trail. And then daily trainers. Again, the midsole compounds are just incredible now. So you can get multiple factors out of it. You can dampen and cushion and still get resiliency and energy. And so we're working that puzzle, and we do every single day at Brooks.
Why trail?
Why trail? Trail's one of the fastest growing categories globally right now. We think it's a bit of a push off from the COVID era when people wanted to be out in the outdoors and in the space. And so light hiking, road to trail, and then top of the mountain. UTMB is an ultra marathon in the French Alps. And
you doing that one?
No, God, not me. But we had top 10 athletes in UTMB. So Brooks is on the road and on the trail, and it's driving our results, 17% year to date.
Last time we talked was actually for my Opening Bid Unfiltered podcast, maybe 5 or 6 months ago. It was the height of the tariff hysteria. Now that we're somewhat behind that, tariffs still in play. How much of your cost gone up because of these tariffs?
Yeah, so it was a puzzle, right? A math problem for us as we came into the summer, and now we feel like it's predictive in terms of the trade policies. We will see about a 2 to 3% price increase in 2026. The tariffs are just now starting to roll in to our cost of goods, but we really tried to take a full supply chain approach to this. We didn't want to punish the consumer, and so we were thoughtful and intentional in price increases, but we'll have a slight price increases on our products next year.
That doesn't sound like very much. How have you been able to only raise prices 2 to 3% when tariffs are double digits?
Yeah, I mean, it really is. We've worked with all of our partners all the way back to our manufacturing final make through transportation and distribution to make sure that one of the things we didn't want to do was punish consumers. If we dampen demand and slow momentum for our products, that's a bad scenario. So we were really intentional on making sure price increases didn't punish the consumer.
Help me understand this. We've been talking all week long about a company like Chipotle calling out sales pressure from 25 to 34-year-olds. Yet your third quarter sales up double digits, 17%. Why do you think that disparity?
Yeah, well, it starts with participation in the sport. It's at an all-time high. New York City Marathon had 200,000 people that wanted to get into the race. 55,000 are going to run. London Marathon, 850,000 people tried to get into London. 60,000 people are running. So participation's at a level that is driving our category. And then people are paying for performance products to improve their experience on the run. Average retail price in the US is up 40% in the last 5 years. So people are investing in their health and wellness.
One of your competitors a week ago came out with some glossy photos of new sneakers they were working on. One of them that caught my attention because I thought it was ridiculous. It was like a motorized sneaker that is supposed to help you walk faster. Is that the future? Do I want to see something that looks like a leg brace stuck atop a Brooks sneaker?
You know, I think we may take a different approach to this. We want to empower your journey in fitness. And so we try to innovate for real innovation in product. We do deep research on biomechanics of human motion. We do runner insights to understand what you want and need on your run. And so everything that we put out in our product category is real innovation.
Like, is that gimmicky?
Runners.
Is that stuff gimmicky?
All I know is what our approach is, and that approach is we're going to do real innovation that improves, reduces injury, increases performance for you, and that's our point of view, and we think it's the right point of view, and it's been consistent over a 25-year period. We've had 14% compounded annual growth rate for 25 years at Brooks. It works.
And one constant over those 25 years has been Warren Buffett. I mentioned at the top of the show that you are Berkshire owned. We've talked about it a lot. The Journal, Wall Street Journal, reporting that Mr. Buffett is going to now be, as he steps aside in the fourth quarter, he won't have his, he's passing the baton on his annual letter. He won't be on stage at the next annual meeting. He'll be within the crowd. What do you think about this passing of the torch, and what does it mean to Brooks?
Well, I think Warren Buffett's the GOAT of capitalism. I mean, is there anybody that's done it better? And how fortunate are we as a brand to be owned by Berkshire Hathaway? There's so much guidance and wisdom that we've had from Warren over the years, and now Greg is stepping into this role, and I couldn't be more happy to be supported by Berkshire. And I always say I've got the greatest job in the industry because of our ownership structure.
Yeah, it's been fascinating to follow both of your journeys, Dan. Good to see you. Let's see you in that New York City Marathon next year. Come on.
I would love it.
All right,
Thanks,
good
Brian.
stuff, Dan. Good to see you as always. Before I go, I want to wish you and your family a happy and prosperous new year. Every single day, I wake up at the crack of dawn thinking how I could help you, the passionate Yahoo Finance investing community, build wealth and live a better life. It's a mission I take super seriously. I am very grateful for your support each and every day. I truly thank you. As they say, see you in the new year. In this case, Friday, as I will be hosting again from 9 a.m. to 10 a.m.